Hi, I'm Eric Theoret, currency strategist at Scotiabank. The Canadian dollar has had a really great start to 2019, with a year-to-date gain of 3% versus the US dollar, beating all of the G10 currencies with the exception of the pound. Oil prices and yield spreads are generally seen as the dominant drivers for the Canadian dollar. However, the dollar's correlations shift over time, depending on the market environment. Sometimes we see a strong positive relationship to spreads, sometimes to oil prices, and sometimes responding to market sentiment, especially in periods of risk aversion and financial market volatility, such as the one that we experienced in Q1 and Q4 2018. So how are these correlations behaving so far in 2019? Oil prices are an important driver for the Canadian dollar, given the size of Canada's energy industry and its importance in terms of our exports. The recovery in oil prices has been a big help to the Canadian dollar, with $10 a barrel gains in the price of West Texas Intermediate, or WTI, and an impressive rally in the price of Canadian crude, with a roughly threefold increase in Western Canada Select. I think it's important to highlight that the Canadian dollar's correlations to oil prices aren't equal, and that the currency tends to have the strongest positive correlation to the price of WTI, followed by Brent. The Canadian dollar's correlation to the price of Western Canada Select has completely broken down over the past few years. The other key driver for the Canadian dollar is the outlook for relative central bank policy, and specifically the relationship between rate expectations for the Bank of Canada and the US Federal Reserve. A simple way to assess this driver is to look at the spread between government bond yields in Canada and the US. Strategists and economists typically look at shorter maturities like the 2-year or 5-year benchmark bond yield and the spread between the two countries. We've recently seen a shift in messaging from the Fed and the Bank of Canada, signaling caution and patience in their respective rate normalization plans. This pause has left yield spreads range-bound and significantly reduced the correlation between the Canadian dollar and yield spreads. We expect the Canadian dollar to strengthen in both 2019 and 2020. We're bullish on the outlook for oil, looking to steady gains across all major benchmarks. We're also constructive on the outlook for relative central bank policy, looking to slightly more tightening for the Bank of Canada relative to the Fed. You can find more thought-leading content from Scotiabank on our website, and you can also follow us on Twitter, as well as LinkedIn. I'm Eric Theoret. Thanks for watching.